Hi, my name is Jenna Parker, and for my oral presentation, I chose to compare and contrast a few differences and similarities in the two food chains Domino's Pizza and Cracker Barrel Old Country Store. Domino's Pizza is an American chain restaurant and international pizza delivery corporation. Domino's was founded on June 10, 1960. Domino's is now the second largest pizza chain in the United States, with Pizza Hut being the first. Cracker Barrel Old Country Store was founded on September 19, 1969. Cracker Barrel is an American chain of combined restaurant and gift stores with Southern country theme. The first Cracker Barrel was opened in Lebanon, Tennessee, which is where the company's headquarters is currently located. While doing some research on the two food chains, I found two differences in their financial statements. The two differences I found are inventory turnover and ratio of fixed assets to long-term liabilities. Inventory turnover expresses how many times a company's inventory is sold and replaced over a period. A low inventory turnover implies poor sales and excess inventory, whereas a high inventory turnover implies strong sales. All in all, a low inventory turnover is not good for a company because products tend to lose their value the longer they sit in a store, or in this case, a restaurant. Cracker Barrel has $142,407 in inventory, whereas Domino's has $30,882 in inventory. Cracker Barrel has a lot more inventory on hand than Domino's. According to the ratios I calculated, Domino's has a higher inventory turnover than Cracker Barrel. Domino's having 38.12% and Cracker Barrel having 5.81%. Therefore, Domino's is more efficient in sales and the replacement of inventory than Cracker Barrel. Ratio of fixed assets to long-term liabilities provide a measure of a note whether bondholders or note holders will be paid. When the people invest money in the company, a ratio of fixed assets to long-term liabilities will help the investors to know if there are sufficient funds to pay for them and their proceeds. Domino's ratio of fixed assets to long-term liabilities is 0.06 and Cracker Barrel's is 1.43. This is a significant difference. Domino's has long-term liabilities of $1,584,222,000, whereas Cracker Barrel's long-term liabilities are $717,000, and Domino's long-term liability doubles Cracker Barrel's. While researching and looking over the financial statements for Domino's and Cracker Barrel, I also found three similarities to the food chain, which include current ratio, number of times interest charged or earned, and rate earned on total assets. Current ratio measures the company's efficiency and short-term view of how the company is doing. To calculate current ratio, you divide current assets by current liabilities. The current ratio between 1.2 and 2.0 means the company is able to cover their short-term debt. The current assets for Domino's in 2012 were $306,267, and the current liabilities were $229,498. The current assets for Cracker Barrel in 2012 were $308,000, and current liabilities were $359,059. Domino's current ratio is 1.33. That means Domino's does a good job in making sure their assets exceed their liabilities. 1.06 is Cracker Barrel's current ratio. The number of times of interest charges are earned. The times interest earned ratio measures a company's ability to meet their debt obligations. It is computed by taking a company's earnings before the interest and taxes and dividing it by the total interest expense. Domino's number of times interest charge earned are 2.79 and Cracker Barrel's 4.27. Both Domino's and Cracker Barrel both have similar earnings before interest and taxes. And last, rate earned on total assets. The rate earned on total assets measures profitability and total assets without considering how the assets are financed. The net income for both companies are similar. Domino's rate earned on total assets is 0.45 and Cracker Barrel's is 0.104. Any increase in the rate earned on total assets for both companies is a positive attribute for the company because it will show the profitability of total assets increasing. As for the year ended December 30th, 2012, Domino's cash flow from operating activities net income was $112,392, and as for the year ended August 3rd, 2012, Cracker Barrel's cash flow from operating activities net